Yeah, hi Smith. Are you able to hear us?
Yes, I
Hello.
am. Yep, able to hear.
So good evening, Smith. Thank you so much for coming. And guys, so today we are back again after a long time. I would say doing a session, leadership webinar, and a very interesting topic, which is I think blockchain. There's a lot of noise about blockchain. We have been doing a lot of sessions on blockchain in corporates. But this is the first time we are doing a session for students, though I have been doing various sessions in Reliance, Amazon, and all. So today we have brought the person who's exclusively working on blockchain itself, and I'm sure that the takeaways from this session will be really huge because Smith have been continuously working on blockchain, and I've seen a lot of his work at AICPA also. Even the AICPA course, which is on blockchain, features Smith's session there. First of all, thank you so much, Smith, for taking out your valuable time and coming out here on a working day. Over to you, Sangeeta, for an introduction about Smith, and then we should start the session on blockchain. Thank you so much, guys. Thanks a lot.
Yeah, thank you, sir. I'd like to extend a very warm welcome to our speaker, Dr. Sean Stein-Smith, and also thank each and every one of you for joining us for this webinar on blockchain and its impact on finance. Dr. Smith is an assistant professor of accounting in the economics and business department at Lehman College. His research includes blockchain application, crypto assets, etc. Dr. Smith also serves on the advisory board of the Wall Street Blockchain Alliance, where he also leads the accounting working group. He is also the chairperson of the New Jersey Society of CPAs Emerging Technology Interest Group. Apart from this, he has been named as 40 under 40 in the accounting profession by CPA Practice Advisor in 2017 to 2019 and by New York State Society CPA in 2020. He is also named as one of the top 100 most influential people in accounting. Dr. Smith will speak on the topic for about 20-30 minutes. Meanwhile, you guys can put your questions in the chat box or you can even raise your hands and we'll take your questions up. Thank you, Dr. Smith, for taking out your time from your busy schedule. Now I'd like you to take over the webinar. Thank you.
Okay, perfect. Thank you all so much. So I do know it's the evening over there. So I do really thank all of you for actually carving out some time on your Thursday night to actually hear about blockchain and to really try to get a better handle on how blockchain is changing and evolving, and also the impacts that blockchain and some of the applications in this area are having on the conversations that are going to have to be asked, right, by anybody who's in accounting, in corporate finance, or in any role trying to help our internal colleagues and our external clients get a better handle on these tools. So I will not dwell on some background about me because you already heard all of that, but I'm very active in the blockchain crypto area. We do a whole bunch of work on the boards of some actual companies out there too. So I'm very easy to find online. Sean Stein-Smith, only one in the world. So very quick search. Okay, but as far as sort of what the content is that we are going to be covering here today, and actually before I get started, can I just ask a operational question? So I'm going to be talking from 10 a.m. my time till 11:30 a.m. my time, correct? An hour and a half presentation. I just wanted to make sure.
Yeah, Smith. I
Okay,
think
perfect.
they
Okay,
will be hearing for more than that also. So
okay,
blockchain is an interesting topic.
okay,
So
great, perfect. Okay, good. Okay, so and I was only asking that really because any conversation on blockchain, crypto, and some of the trends out there really is an awfully tough topic to try to break down and to analyze and to actually talk about in a uh, compressed format, right? And so even in over an hour talking about it, we are only going to be able to really sort of touch on some of the trends and some of the updates out there in terms of really how much blockchain has evolved and changed since its early days in 2008, 2009, and then also its early days of being part of some of the mainstream conversation back in 2017. And so a few of the topics we're going to be analyzing here are sort of talking about this sort of new version of blockchains, right, that have emerged out into the marketplace, that they're called private permissions or a hybrid model. And then sort of to add onto that, we are also going to then try to analyze what we're talking about. If we're talking about this whole asset-backed coin area, are they privately issued stablecoins, or are they actually now crypto assets being issued, governed, and actually managed by a actual government? And so both of those are on the surface kind of the exact same thing, but they actually aren't really. And then to sort of end our conversation here, we are going to talk about some of the IT, some of the control options, and some of the control questions that are going to have to be asked as blockchain and other types of crypto assets become more and more mainstream and more really embedded into how companies operate. So with all of that said, we can actually dive in. So to open up this whole conversation here, and a topic that I always try to introduce that some context and some background into this blockchain conversation, right? Because obviously blockchain and crypto are hot topics, buzzwords, all the rest, but it's really pertinent to our roles and our conversations to really understand what exactly it is we are talking about, right? And there has been this sort of big shift or this big pivot. I would argue really since the end of 2017, right? Because in 2017, the price per Bitcoin peaked at about $20,000 per coin, and although during this past week there have been price upshots to about $18,400, we haven't ever gotten up to that level. But as a direct byproduct, after that sort of popping of that Bitcoin price bubble, there was this change in tone and this change in interest in the Bitcoin blockchain crypto space. And that really, if you actually go through the headlines, market coverage anywhere, right, in the US, in India, other areas of the world, the whole conversation has really sort of pivoted from Bitcoin open source model of blockchain without barriers or any gatekeepers to now corporations like Amazon and Reliance and other large institutions honestly taking a much more proactive role in the blockchain space, right? Actually, at Forbes, now there's an annual top 50 blockchain listing put out every single April. And so really that whole narrative and that whole focus in the blockchain crypto space has really done a hard pivot, right? From being open source, trying to cut out third parties, payment processors, large incumbent institutions, to actually now being co-opted, being developed, being actually used by those very same institutions. And so while there are some out there who would argue that sort of the co-opting or the onboarding of blockchain by the Amazons of the world, HSBCs of the world, is a bad thing, I would personally argue that in order to get blockchain to work, right, to operate as advertised and to be used by all of us, right, by individuals, entrepreneurs, institutions, students, folks out there working on an everyday basis, there has to be some level of control, right? There have to be guardrails, frameworks, and there have to be policies linked to crypto and blockchain that all of us can understand. And so honestly, right now there is this blockchain problem. And the problem is not linked to the actual code itself, right? blockchain works, right? It works as advertised. All of that is obvious. But the real issue is this a lack of frameworks and this lack of overarching policy anywhere in India, China, Europe, Africa, US, anywhere, right? There is no overarching policy to help guide how the blockchain space operates. And there are about, I would say, 4,500 cryptocurrencies out there, with 2,100 of them traded actively every single day, about. And so, okay, fine. That by itself isn't a huge deal, right? Because there are bonds out there, equities out there, commodities. So that's fine. But the actual problem is that, well, there are hundreds of options now, hundreds and hundreds and hundreds of options out there for institutions that are trying to use blockchain in their core business operations. Okay, options aren't always a bad thing, but the real issue is then sort of pointed out that there is no overarching narrative or sort of backstop as to, okay, fine, for a private blockchain, here's how it should operate in terms of GAAP standards, IFRS rules, and all the rest. There are no operating guidelines for how these blockchains are to be used in a company, and then also how all of us in accounting, finance, econ, markets are to treat and to understand both the information stored on these actual blockchains and then how to treat these array of crypto assets that are operating on top of them. And so a question that I always like to ask, either in person, ideally, or online, is to ask, right? Just sort of have this thought going on. How many of you would feel confident talking about blockchain either to a coworker, a colleague, a friend, a teacher, and to really feel confident to actually talk about and to explain and to answer sort of why it's a big deal and also why it's still a hot topic? Probably not everybody, but hopefully after our evening here, all of you will at the very least feel a bit more confident. Okay, so to sort of introduce, right, sort of the types of blockchains out there, because a core point that I always try to highlight is that while the blockchain, it's a buzzword and a hot topic, it's more also now of a overarching term, right? It's a umbrella term that actually oversees several different areas. But how the bulk of us got introduced to the whole blockchain idea is via a public blockchain. And so it's a totally open source, decentralized model of how data and transactions are able to be stored, transferred, all the rest. And so each member of this network is called a network node. And there are partial nodes, full nodes, all of that, which I won't bother you all with on this evening. But honestly, the whole proof of work, the whole conversation on mining, hashing, nonces, all of that, which does, I feel, tend to still dominate the in-house conversations on blockchain, are only pertinent for this public model, right? And so if we all take a step back, right, because it's blockchain, crypto, auditing, tax, whatever, but from a business and management point of view, right, trying to help our colleagues, our clients actually make better business choices, ultimately, if I have this network that is open to anybody to be a part of, then how do I try to ensure that the blocks being added onto the blockchain that have certain transactional data in them are actually being uploaded in the correct manner? I don't know who's a part of this network. And so then that sort of baseline question introduces the whole conversation of proof of work. And basically, it's a hard math puzzle or a math problem that has to be solved prior to adding any additional blocks onto the blockchain. And then after that answer has been sort of posted out to the network, and that answer in turn is then confirmed by other nodes, then and only then I am able to add that block onto the blockchain. I won't dive into it too much more, but if it's but if the process kind of sounds complicated, that's because it is. And to actually have it be operating as advertised, it is awfully tough to have it work at that commercial level, and to actually handle the transaction volume actually needed by enterprises. And so it's complicated, power intensive, hardware intensive, and it's hard to have it work again at that commercial enterprise pace, right? That any company trying to again capture some of those benefits of blockchain internally is going to want to actually capture. Okay, so we have this idea of blockchain out there, but it isn't really a good fit for the commercial space. Okay, hence the rise of this whole private blockchain area. And sort of the best way to try to think about this, or to try to have a conversation on this, is that overall, right, the idea of a private blockchain is almost a halfway point between a public blockchain and a current ERP system, right? Used at any company, Oracle, SAP, QuickBooks, anything, right? Any of those accounting software packages. But the core item here to always keep in mind is that now in a private blockchain, if it's a hybrid blockchain or a permissioned blockchain, it's now organized by a organizing firm. Okay, so I could be the organizing firm here. So I hire the coders, developers, programmers, have them actually build out that blockchain for me. I'm the organizing firm, so I know how the blockchain works. Then I in turn can invite all of you to then be a part of this private network. Okay, so off the top, there are two main points here. One is that now there actually is a person or an entity in charge of this blockchain, whereas on the Bitcoin blockchain, there is nobody in charge. There is no CEO of Bitcoin. But now for a in-house or a private blockchain, now that organizing firm or that panel basically, or sort of that team of organizing firms is in charge. And so now I know who's a part of that network, and then I can actually grant different levels of access to various members. And so from a commercial adoption point of view, it's a absolute win here, right? Right, because now I can actually capture quite a few of the benefits of blockchain, but also now have those controls and frameworks in place over how the blockchain operates. And so, from a commercial enterprise point of view, here's honestly where the whole conversation around blockchain really has been happening at any institution. I know there are some institutions out there that are trying to sort of piggyback off of more public models, but the bulk of them, right, 85, 90% of them are only focusing on actually building out their own models in-house to operate as they actually want. But just a point here that we are going to hopefully come back to towards the very end is that, well, if I'm going to tweak, right, this idea of the blockchain, which is encrypted, consensus, very, very hard to hack. And so if I then have that idea and I tweak it to then work as I want it to do in my firm, I always have to be careful that as I'm doing those edits and those tweaks, that I don't accidentally undermine those core attributes of the blockchain. right? In terms of having that data encryption at the core of the idea. Okay, and so now here, a just quick word on this idea of a public permission blockchain. So it's an area of blockchain development that probably doesn't get the headlines of obviously a Bitcoin or of blockchain projects underway at companies like Facebook, Amazon, Microsoft, Google, huge in-house projects. But the idea here is that really it's sort of a hybrid, right? Because if the idea of a private blockchain is sort of the halfway point between a public blockchain and our current ERP systems, this actual version, a public permission blockchain, is a halfway point between being public and being totally private. So it's halfway of the halfway. Okay, and so now in this version of a blockchain, again, organized by a entity, a agency, or a group of these entities, now I can post out different types of information and actually let the public, right, the external marketplace, go in and analyze all of that information while also having control over how that data is added, how it's updated, and all the rest. So a good application is any online search portal, Google, Bing, any of them, right? Baidu over in China. Any of those online search portals operate basically in this manner now, that anybody has the option to then go online, put into the online search portal how to make whatever, anything, and then I pull up data. And so I had access to all of that data, but only a handful of individuals can actually have the access to then go in there to either edit how it shows up, what shows up, or to edit what types of answers show up in different areas. And so a good version of this to keep in mind is that any healthcare network, and I don't know how many of you work or know of or are involved with any sort of not-for-profit, charitable agencies, healthcare networks, hospitals, agencies of that kind, housing authorities, have to publish obviously how they're doing from a financial point of view, but oftentimes have to also publish, or at the very least report out to a overseeing agency, other types of information, right? Patients helped, all the rest. So a institution like that, and the bulk of the conversation, conversations I've had in this area have been primarily focused on a sort of non-profit areas. So I don't know how it's going to play out going forward, but I do think it's an interesting application of blockchain for any sort of governmental actors that, well, on paper, at the very least, have to make data available out to the public. Okay, so obviously now all of us are now experts on everything blockchain, right? Absolutely. But now, obviously, I could talk about those versions of blockchain all night. But in order to try to give a sort of good update and a good sort of comprehensive overview of sort of how quickly and how much this area has changed, I'm going to pivot now over to a conversation around different types of crypto assets. Okay, so here in the US, there's been a lot of conversation, and I'm focusing here on the US because I'm an expert on these topics here in the US. I don't know all of the nuances of the oversight agencies in other countries. I can only assume or guess that a big chunk of the overall conversations have probably been going on in a similar manner. But back in September of 2020, the Office of the Comptroller of the Currency, right, the agency that oversees currency, actual US dollars. Overseas actually then came out and said, so the US does not ban crypto. No, absolutely not. And to just add some extra sort of context there, actually, it's the exact opposite. And I'm going to get to that more in some upcoming slides. But actually, both from the private corporate sector and actually now at the highest levels of US government, right, there is an active interest and active investment in trying to get crypto into the mainstream. I'll come back to that later, but no, absolutely not. There's a huge interest and a huge market for buying crypto, trying to use crypto as currency, and then now at large financial institutions, Fidelity, BlackRock, JP Morgan, to actually have large allocations of funds into this area. So, and I'll come back to that more, and I'm happy to answer any other questions on that topic though. So, and to just add some extra sort of context here, even though there is this a large appetite for blockchain and for cryptocurrencies, you know, there isn't really too much, I would say, consensus yet as to how these assets are going to be treated, right? And so back in September, one of the major agencies that oversees markets, currency, all the rest, basically now says, okay, if there's a private entity, right, me, I can issue my own crypto asset, my own cryptocurrency, have it backed by the US dollar, and then now I can have access to the full commercial banking area. So now those actual dollars that I'm holding on deposit to help back my cryptocurrency, I can hold those now at Bank of America, JP Morgan, and then have them held there and be covered by all of the protections that then come with that. So it's huge news, right? Because as we're going to see here in a moment, this whole idea of a privately issued stablecoin is really, I think, the major driving force in how ultimately different versions of crypto assets are going to be able to be used, both in the US and internationally, right? So I would assume that all of us have heard about Bitcoin, right? And the impact that it could have, is having on markets, finance, payments, all the rest. But really the area that I think is arguably going to have the biggest impact going forward in terms of institutional accounting being used as currency is assets like this, right? That are basically now issued and governed by a private entity, as opposed to Bitcoin, who is issued by nobody, right? It's all governed by the underlying blockchain. But actually now, if I'm talking about privately issued stablecoins, now they are issued and governed and managed by a entity or a group of these entities, and they're tethered or they're connected or they're pegged, right, to a underlying asset. So a good way to try to sort of think about this is if there's a foreign currency that is pegged to some other currency, right? That's the exact same thing here. And so now all that I'm saying is that versus being a foreign currency, now it's a cryptocurrency that's pegged to this underlying asset, be it the dollar, yuan, yen, euro, pound, peso, whatever. Any of these other currencies are the basis for how this other now asset has its actual value. And so to add some sort of context here, right, some backdrop in terms of trying to add as to sort of why we're having this whole conversation here. So I see we have a question coming in. Kindly clarify, is the SEC or the US Supreme Court, the actual regulator for blockchain, because if it's a open source. So that's a very interesting question. That's an excellent question, and see if I can see who submitted that. I can't really. Cerium? That's an excellent question. And in terms of oversight, right? How it has tended to work here up to now, right? It could always change. I'm sure at the word of our, we had a vote here earlier during the month. Might have heard about it. And so there are going to be some other folks that are going to be taking office in a few months. But the angle that most of the crypto blockchain oversight has been taking here is to not focus on so much the actual blockchain, but to instead focus on the applications, right? Like Bitcoin, like cryptocurrencies. So in terms of the direct oversight, I would say that it has been agencies like the SEC or the IRS or the OCC, and that really the Supreme Court really, and I know it's been talked about quite a bit lately here in the U.S., but the Supreme Court really only actually weighs in on issues that are more linked directly to the U.S. Constitution and how it's being updated or interpreted now, and that the Supreme Court really is not involved with issues of quote unquote normal law problems, but in terms of the oversight and the enforcement, the bulk of that has been either up to now been at the IRS or at the SEC. Yes. Yeah, and any questions coming in, ask me, please. Yeah, and so the whole cause as to actually why we're having this whole conversation on these sort of new types of crypto assets is to help tamp down on a whole bunch of the issues that in some countries has actually caused cryptocurrency to be banned, either officially or unofficially via other tools. Tax treatment, price volatility, and also lack of control as to who is actually behind these assets, who controls it, and then how they're actually going to be treated. And so to add some context here, sort of what exactly are we talking about? So now Bitcoin is sort of out there by itself, right? Hanging around, having its own impact on markets and payments and all the rest. But actually now we have this whole conversation on now cryptocurrencies backed or otherwise connected to some underlying asset to help cut down on that price volatility, to add some more transparency and traceability as to who is issuing it, who is owning it, who is actually using it, and to also try to have it fit better into the current oversight framework, right? Because it's also worthwhile to note and that you point out that there is no one area of the world or country or area that has a comprehensive, consistent blockchain crypto policy, right? In terms of sort of how they're treated, how they are held, and to try to get the rules of the road outlined. And so really the big sort of driving force here is to try to answer some of those actual questions, right? Is to try to tamp down on that price volatility by now adding into our whole conversation here this external asset that everybody understands better. So a few sort of core points here, right? And I'm only pausing here on these points here because one, these I would argue that the items here are the core points that are going to drive the bulk of investment and interest into blockchain crypto going forward, and also are the main issues that have kept cryptocurrencies from actually being used in a widespread manner as a real fiat alternative anywhere, right? So off the top, we are still talking about cryptocurrency. So either way, if it's banned or not, if it's taxed or not, I'm still talking about cryptocurrencies, even if they're pegged or actually tethered to gold. I'm still talking about cryptocurrency, and the underlying blockchain still has to be analyzed, right? I still have to go in, research, examine that underlying blockchain to make sure that I understand it, and that the external client, that my partners, colleagues, whatever, understand how that blockchain works, right? Sort of what version of it are we actually going to audit, and then honestly, right here, sort of the core points are that the main force behind the rise of these sort of new versions of cryptocurrency are built to help encourage more adoption, more understanding, both on the side of any sort of agencies that are overseeing it or the individuals that are trying to actually use it. So in terms of understanding the impact of these asset-backed coins on accounting, finance, payments, all the rest, it's always important, I think, to understand what we're actually trying to confirm here, right? Is this coin actually operating with a lower level of price volatility, right? Because Bitcoin prices make headlines and they drive conversation, but trying to use that as a way of doing business, as a medium of doing transactions, is awfully tough, right? Because if I offered you a form of payment that in a month could have dropped by 25% in terms of its actual market value, or increased by 18%, you probably aren't going to take that form of actual payment, right? Everybody wants, it can be individuals, entrepreneurs, institutions, always want to get paid in a manner that's actually going to hold its value over time. And so that really is the main point that any conversation now, honestly, in the blockchain crypto asset space has to answer, right? Is the actual blockchain built for enterprise use, and are any crypto assets linked to it built to actually be used at that enterprise level? And so, yeah, and so just sort of reiterate this, what I would, again, just sort of point out here is that really points 3, 4, and 5 are the main areas that I think any asset-backed coins are going to have an influence that is going to be specifically pertinent to finance, corporate accounting, public accounting, or any markets at large, right? How are we going to fit sort of blockchain and crypto assets, right? Because even if there are areas or countries or firms that are not interested in it right now, if everyone else is, then it's only a matter of time until any outliers, any institutions, areas, countries that are not actively in it are going to be forced to be in it, right? And so it's always a excellent idea, I think, to always sort of keep an eye on some of those bigger picture trends out there, even if right now on a Thursday night it is not pertinent to you or your firm or your education or your life. It is going to be, right? Because it's honestly going to be as widespread and as broad-based as the internet is right now. Okay, and then yeah, I will not harp on this in the interest of time. I do want to talk about quickly sort of the direct impact, right, of these new crypto assets issued and governed, don't forget, on a in-house blockchain, on a private blockchain now. How does this actually work, right? In terms of accounting, finance, markets, I can issue a coin, right? SSS coin. Issue it, have it backed on a one-to-one basis by the US dollar. Okay, great, but how does that actually work, right? So if any external investors, external third parties, other institutions are trying to then actually use that crypto asset as a way of actually doing business, okay, fine, but then how does it work if that investor wants to get out of this investment? How do they get out of it? Are they actually able to? And I think we have a question coming in. Let's see in the chat. Do throw light on the accounting of, okay. So we have a question coming in from the organizer. So how do we do the counting for these crypto assets? Okay, so that's an excellent question. So I would say that off the top, right, there is no answer right now, right? There is no authoritative answer either from the FASB or the IASB under GAAP or under IFRS, right? There is no answer out there. And as a result of that, right, of the sort of open item instance, right, this big question with no obvious answer, the big four have kind of tried to create a answer. And so I'd say really since 2018, there have been white papers, podcasts, webinars, whatever. It's sort of like an outreach campaign to try to convince all of us that crypto assets are to be counted as intangible assets, which at first glance is like, all right, fine, kind of makes sense, but actually makes no sense, right? Because for a intangible asset, if I have to take a write down on it, if I have to impair that intangible asset, I can only impair it down, right? Down. So if I bought Bitcoin, let's say in 2017, right, and I bought it at the peak at $20,000 per coin, I did not. So just FYI. And then I had to actually mark it down to the lowest price, I believe, here in the US was about $2,800 per Bitcoin during, I think, either the end of 2018 or early 2019. Okay, but what happens if and when that actual price goes over $20,000? I'm unable to actually have that show accurately on the balance sheet at that time. And then also in terms of how to do these asset valuations for a intangible asset, how often do I actually do them? Do I do it every day, each week, every quarter, every half year, or every annual period? And so then also, what actual price do I in turn take for the current market value? Unlike equities and bonds, the actual trading market for crypto assets is always open. So there is no end of day price to actually use. So how do I actually do this? And so there have been some other conversations that have been had over, well, okay, so if we call it all a indefinite lived intangible asset, that's not really going to work. So do we call it inventory? But it's not really inventory either for for most firms, right? If they're either being paid in it or trying to use it as a currency, then it's not inventory. And it's not currency because in order to be counted as a currency, and I don't know the specific nuances of every country, but in order to be counted as currency, it one has to be able to be used to actually pay off debts. So in turn, I would have to be able to actually pay off a mortgage or a loan using Bitcoin. And it has to be issued by a authorized agency. So it has to be legal tender, or it has to be actually legally issued by the government or some other government branch as money in the context of that actual country. So as of right now, 2020, there is no hard and fast answer on this. Personally, I think, and I've been saying this in podcasts, articles, conferences, all the rest, that I honestly think, and that I hope actually happens, that in order to actually capture correctly the full breadth of crypto assets, right, from Bitcoin to these asset-backed coins to sort of this new topic of now actually coins being issued by a government proper, that there actually should be the creation of a whole new asset class linked to crypto assets, right? But because it's, I think, painfully obvious that one, there are some different options out there now under the whole sort of cryptocurrency umbrella, and two, assets, instruments of this kind don't actually fit into any of the options or the ideas that are currently out there. And so to answer that actual question, I think personally that there actually should be a whole new asset category made for this new sort of crypto asset space going forward. And actually, that was a portion of a bill that was put forward here to the US Congress back in 2019. And so we have some other question coming in. Is a smart contract programmed with VBA? Are they predetermined? If not, how does it overcome faster performance in blockchain for a financial analyst or for investors who are solely interested in profit? So I believe what the question is okay, fine. How does this whole smart contract thing actually work? And so the short answer is that it's going to depend on how the company in question actually wants to code out that smart contract, but that there is no reason why it would have to be coded specifically in any one way, be it JavaScript, VBA, in a Excel focused format, or some other language, right? Because the idea of a smart contract is, on the one hand, kind of an abstract idea, right? Trying to actually take a actual contract written and then translate it into basically a whole bunch of if-then statements to work on a underlying blockchain. But in terms of actually have it being used, it isn't really so much being coded in the if-then format like in Excel, but actually rather it's actually coding different aspects of how the transaction has to happen. So it isn't really so much a contract anymore as it becomes almost a list of items that have to be executed if the prior activity happened. And so in terms of, are they able to be automated entirely? I would say that they could certainly be automated entirely, and that as far as any sort of traders go or any financial institutions, what I would argue on my own conversations here is that really those types of institutions have tools actually right now that operate better, right? right, than any sort of blockchain-based option out there. And actually saying that brings up a excellent point that even though blockchain is a hot topic and it is being talked about quite a bit and it has some real upside to it, it is not a perfect answer for every problem, right? Not every company or every issue in every company is able to be solved or even helped with a in-house blockchain platform. But in terms of the actual question as to are they able to be automated? Yes. Now, in terms of a good IT control conversation, is it always a good idea to automate everything? No, right? There always have to be points, access points that individuals or some other program at the company can in turn check the actual process. I think I saw some other question come in. Loving these questions, keep them coming. And without the third party, it will automate, but what if uncertain events occur? That's honestly one of the biggest headwinds right now currently out there. Right. So if I and some other counterparty have a blockchain-based platform now, right, to track inventory and payments, then I can automate. Now, after the goods are actually shipped to me and I confirm receipt, I can then automate that whole confirmation of the inventory, approval of the ACH payment, and then actually paying out via wire or a ACH to that external third party. And the real crux of the issue here is that your actual question is a question that is being trying to be solved right now, right? That as companies try to automate certain processes and try to weave in blockchain, which is hard to edit and hard to change also, don't forget, how do we keep that sort of flexibility in there to actually give the individuals or the firms access points to then go in if there's a change in the firm or in how the firm operates, to actually give those individuals a opportunity to go in there to actually make those updates. And actually, that's actually one of the job roles and types that the AICPA has outlined as a future opportunity for auditors and for other individuals working in accounting, right? To actually serve now as that external third party to one, sort of make sure that the automated contracts are operating as advertised, and that if there are changes that have happened that in turn require updates or any changes, that those updates are done in a unbiased and third-party manner. Simply put, without lawyers or consultants, blockchain existence with the virtual interface, yeah. So yes, absolutely, right? And that's an excellent point, right? That IT tools and automation are excellent things, but they are just tools, right? And that any tool, if just left by itself or put into place by individuals who aren't sure how it works, or trying to be operated by individuals who aren't sure what they're doing, can do quite a bit of harm. And so having lawyers, accountants, consultants absolutely is a core part of any blockchain project. There have to be those external experts to help the company understand what they're actually trying to onboard, and then how it's going to change how the company actually works. And so, yeah, and so then to just hop back here really quickly, how do we actually redeem these asset-backed coins? And all of this is in turn normally governed by some sort of automated process, be it a actual smart contract or some other process. how do we actually in turn do the correct valuation and counting for assets that are on the one hand a cryptocurrency, but on the other hand are able to be traded in for dollars, gold, oil, other assets of that kind. And then how does that transaction actually impact the current valuation of these two assets now, right? Because on the surface, having a cryptocurrency that's backed by some external asset on the surface is awesome, right? Because there's lower changes in price, all the rest. But actually now we are doing the books now for the actual cryptocurrency and the underlying assets. So now it's actually double the work, which is always good for us and trying to earn some work out there. Okay, and just in the interest of time, I'm going to breeze over a few points here, sort of trying to dive into really some of the more focused accounting questions, right? Yeah, so right here on slide 23, right? Sort of in terms of the audit and the accounting for these companies and this information, right? Because the whole asset-backed coin space is huge, and it's fast growing, and it's international in its operations, right? So how do we audit these firms? And actually, I'm going to drop a note into the chat of a company that actually made quite a bit of news back in 2019 called Tether. And basically, the whole issue there was that this firm issued their own coin, right? It's a private firm issuing its own crypto asset coin backed on a one-to-one basis by the US dollar. So on paper, every tether that was actually out there had a US dollar held on deposit somewhere. All sounds pretty straightforward. Turns out that actually was not the truth. And after they had an audit done, after I'd say about 2.5 years of sort of dodging auditors and bank examiners and all the rest, turns out that they were short, that they were under by, and it's ranges between $650 million and $800 million short. So they had almost double the actual volume of these coins out there versus the dollars that they had, that as they were advertising, actually each tether had a actual dollar underpinning it. And so a instance of that kind, and there are dozens of them out there that have happened, and there are probably hundreds out there right now operating who have not yet been uncovered. But all that really highlights the importance of a good audit plan and a good audit outlook. I think I see somebody dropping it into the chat. More on blockchain. Absolutely. So actually, that actually brings me, in the interest of time, I am going to pivot over now to some of the implications, because I always try to over prep my slides. But I did want to talk about right here quickly, just before we pivot over to some of the IT applications and some of the job opportunities that have been outlined. I did want to just talk about briefly a trend out there that I think will impact everything from the blockchain and crypto asset space. And that's really the rise of central bank digital currency, meaning that actually now the whole conversation from a actual blockchain point of view has in turn now actually changed totally, right? From being open source models, Bitcoin, all the rest, to actually now having those exact same crypto assets be issued and governed and managed by a actual government or by a centralized agency. So I did think, and I'll be sure to provide the whole deck to the organizers here. But I did want to just introduce that concept and to really talk about now. In terms of talking about blockchain, it's always important, I think, to also talk about crypto, right? Because they do go hand in hand, right? And in order to have a conversation on one, you have to have a conversation on both, right? Because that's how most people get involved and they're interested and are engaged in this whole area at large anyway. And so I did want to just sort of put a pin on that more sort of crypto-focused conversation by trying to highlight really how much the whole area has changed and evolved. But now actually we are going to pivot over actually more to the IT control point of view, right? Because a common misunderstanding that I've seen quite a bit is that as we get blockchains more up and running, right, more embedded into how firms operate, into how they actually function, that there is this idea and this concept that the idea of the audit or the idea of controls are not going to be as pertinent or as high profile going forward. Actually, I would argue that as we move forward towards more automation and more embedding of actually blockchain into core business operations on a international basis, that actually honing in on the IT angle of it is more important, arguably, than ever prior. Okay, so in terms of blockchain and crypto and then some specific audit impacts, right? So it is worthwhile to actually point out that there have been hacks and breaches of blockchain-based companies and of cryptocurrency-based firms, right? That have been hacked and caused millions of dollars in actual damages, both in the U.S. and overseas. And we have a question coming in. Do ERP solutions and blockchains work simultaneously with each other? And is there a possibility where a blockchain could then replace a ERP? So I would say that yes, as of right now, there is a strong sort of co-working connection between blockchains and current ERPs, right? Because if we actually take a big step back, right, there are actually three ways in which information can be stored, transferred, or analyzed. On the one hand is sort of the current ERP model, right, where all of our data is housed and it's actually stored in sort of one hub at a institution, at a Amazon, Tata, any entities of that kind. And then over here, sort of a more open source model. So if any of you have worked with any sort of file sharing service, be it Google Drive, Microsoft OneDrive, other options out there, everybody has access to that data in real time. What actually blockchain is at the core of the idea is sort of a evolution of that, right? Because under the current hub model, under the current ERP model, all of that data and those transactions, are kept in sort of one hub. And so then on paper, it's all there. So there's only one source of truth. But keeping all of that information there also is almost like in your home, right? As you enter the home, on that front wall of your home, you would have a outline of your house, of your home. And then on that map, a big red X pointing to where all of the passports, cash, gold was in the house. So yeah, all of it's in that one place, but all of us know where it is, right? All of us know, obviously, but then also all of the bad actors also know too. And so in terms of sort of whether a blockchain will at some certain point actually replace current ERPs, I would say that that could happen, right? But that it's more likely, and that the trends that I've seen, right, personally, are that firms are trying to build blockchain applications and some facets of actual blockchain into their current operations, right? And a prime example of this is a JP Morgan, right, who actually started to build out their own in-house blockchain in 2018. And just, I believe, earlier this month or at the end of October, there was I guess like a press release basically issued that the actual bank itself was actually going to carve out its in-house blockchain business of over 100 people working only on that into its own line, into its own business unit, and that too, by the end of 2021, they are confident that they're going to earn a profit on that blockchain business. So what I would say is that right now in 2020 to 2025, right, there is going to be this push at these major institutions. Walmart is an excellent example of this. They've actually built in blockchain tracking, transparency on top of their current options out there, right? Because every company has their current IT platforms, right? Payments, inventory, purchasing, whatever. But if by adding a layer of blockchain onto that, under it, on the ends of it, can help improve how that process operates, that is where companies are going to start, right? At the margin, working inwards. Now, ultimately, as this whole ecosystem continues to develop and grow, I would say, yeah, absolutely. Now, I wouldn't know when exactly or how it's actually going to look, but I would definitely say that at some point in the future, it's entirely possible that there are going to be whole ERP options that are entirely based on a blockchain. Absolutely. Now, I think there was a question that came in the chat. Let's see. And corporations are leaning toward blockchain, Hyperledger Quorum being easy to establish and access controls, but it is not accessible. It is not accessible to the average investor. Well, and I would say there that in terms of actual sort of blockchain, right? In terms of actual blockchain being used by those institutions, right? And I have some core points here to actually point out, more honing in on blockchain impacts specifically to audit, and even really trying to use blockchain at a entity at large. On the one hand, right, the idea of blockchain was to sort of centralized data, but on the other hand, having to build out the blockchain, having to actually get it to work inside of an entity, it actually is quite hard in terms of the IT side of things, actually having the underlying coding, programming correct, and then having to actually hire folks to actually have it interoperate correctly with the other IT platforms, and then hiring people who understand it and hiring those individuals to actually train other employees. It actually has become really a project and an idea that is being sort of led by these big multinational firms, right? And it has evolved that way because actually getting a blockchain to work as advertised is actually quite hard. But ultimately, right, and to just add some background here, as far as it not being really an option for individuals or for other sort of non-huge firms. So the Quorum blockchain has over 300 banks that are a part of it right now, and is currently right now processing $6 trillion, $6 trillion, trillion dollars in payments every single day. And so at that level, it's only a matter of time, right? Either directly or indirectly, that every bank in the world is going to be impacted by that type of blockchain project. Sure, these actual projects, they start at JP Morgan or at a Walmart, but actually their scope and their reach is international. So on the payment side, it's already underway. And at a company like a Walmart, sure, it's a big, huge entity, but actually their main push in terms of how they're using blockchain is their food supply chain, trying to be able to actually get some extra transparency, some traceability into where actual food products come from. So yes, absolutely. Right now, the actual projects are currently being led at those top levels, but as they actually get up and running and then absorb more of their partners and their suppliers, it is going to hit all of us. I would say probably if you wanted to put a actual date on it, and I would say that obviously COVID has impacted this, but I would personally argue that by 2025, I think blockchain is going to be much more mainstream than you would think right now. So we came into the chat. Even IBM researchers are working on a way to overcome the controls. Yeah, absolutely. I mean, there are brilliant people everywhere trying to fix issues with blockchain so that it can actually operate as advertised and then actually deliver those upsides and actual benefits promised. And so a few of those issues out there, right? How do we actually avoid sort of just handing over total control over how we store, process, and actually transfer data as we use tools like blockchain and automation inside our firms? And to a point that we also raised earlier, this whole idea over a smart contract on paper is awesome. I can automate processes, payments, confirmations, all the rest, and all of that works just as long as there aren't anything or there aren't any updates ever, which, as we all know, I mean, there are always updates, edits, and tweaks to either how the firm operates, how those external contracts are actually governed. But one other point in here, that actually blockchain in and of itself doesn't do anything to confirm the accuracy of the information. So all of those, proof of work, proof of stake, hashing, the algorithms, all of that only checks whether the actual block itself is being added in compliance with the rules of the blockchain. And it has absolutely no oversight or insight as to whether that information in that block, those transactional records, are actually accurate. So now that's really where all of us come into play, right? In terms of trying to keep in mind that if I have this blockchain that I'm a part of, so if I'm a bank who's a part of the Quorum blockchain, or a food supplier who's part of the Walmart blockchain, that's going to change how I treat data inside my firm and how I, in turn, want my suppliers, partners, auditors to actually treat data, both inside the firm and outside the firm. And I think I saw somebody drop into the chat right here. we're bringing so we have a question. Will bringing in a centralized agency affect the decentralized of information on a blockchain in any way? Oh yeah, absolutely. I mean, I mean, there is a component of the blockchain crypto asset space that is actually quite upset, right? That all of these in-house blockchains, private blockchains, corporate blockchains are entering more and more into the mainstream conversation. Absolutely. Actually, and I'm just going to drop two terms into the chat just in case there are any issues in terms of audio, and also I do know it is getting pretty late over there. So there's this term Bitcoin maximalist and the hold on for dear life mindset out there, HODL mindset. And yes, I mean, both of those communities out there are in turn not terribly thrilled with the rise of these sort of corporate blockchains. But in order to get individuals and institutions to actually trust blockchain, and to trust crypto assets, there is going to have to be a layer of control and a layer of sort of authenticity that only a large institution or a agency of government can actually grant, right? Politics out of it for a moment. You know, in the everyday conversation on a Thursday, right? Most individuals and institutions are going to have more confidence in a new idea or concept if the big firms and the government are out there using it, supporting it, and actually having it built into how they operate. And then ultimately, but as that happens, though, how is that data actually being uploaded onto the blockchain and then exported back off, right? Because there are hundreds of cases of hacks and of breaches in the blockchain space, but the bulk of those, I would say almost every single one of them, has no connection to the blockchain itself, but instead are almost directly linked to those on-ramps and those off-ramps, or how data is uploaded onto the blockchain and how data is then exported back off. Again, trying to highlight the importance of good internal controls and good audit testing of those controls, and of sort of how the internal workflows now at these companies have evolved and changed as we have interwoven blockchain into more of our core business operations. And so ultimately, you know, any accountant, auditor, CPA has to understand, one, why the firm is actually using blockchain, two, how it's impacting the way in which our client firm actually handles its information, and then three, how it's going to change how the data inside the firm right now is then exported out to the marketplace. And then just a quick note here, right, that in a blockchain crypto angled conversation, it's awfully easy to only talk about blockchain crypto asset trends. And on the surface, that makes perfect sense. But it's also, I think, critical to always keep in mind, right, that there is no tool, be it blockchain, crypto, or the rest, that is being built out in a bubble, right, by itself. That there are trends out there like AI, like RPA, like automation at large that can, on the one hand, turbocharge the actual benefits of having this tamper-resistant ledger to store and to transmit data, but can also in turn amplify any errors in that data, right? Any errors either in that data, any errors in the controls over how that data is imported or then exported, or any errors in actually how that data is analyzed. And then actually down here at the bottom, automation is great, But if all I'm doing is automating bad processes or bad workflows, I'm not getting any benefit. And yeah, and so I just also inserted in here a handful of the high-profile cases where there were hacks, breaches, and other actual funds actually stolen in the blockchain crypto asset space, but they aren't really linked to blockchain proper. And so a report out of the AICPA points out and then in turn highlights a few of the real problems that are able to pop up in a blockchain-based ecosystem, right? Again, that the actual process by which a blockchain operates or how blocks are added isn't actually going to check or confirm the accuracy of that information in terms of uh, having it be authorized, have it be actually legal, or even having it be accurate. And so really, all of those open items are opportunities for really, and I did include the hyperlink down at the bottom. I believe it's about a 25-page white paper published by the AICPA, really trying to highlight and to point out that, yeah, you know, there is this conversation out there that blockchain and crypto are going to totally upend everything linked to accounting and audit, but there are still large areas of work, right, and of issues that as we try to onboard blockchain more and more often, you know, there are going to be areas that are only able to be solved by individuals who have knowledge of blockchain, but who also have knowledge of controls, how to test those controls, and how to offer assurance over various data produced internally and then exported externally. And then to wrap up my content before I open the floor for any other questions, what I wanted to point out here is that really, in terms of sort of job opportunities, blockchain, crypto is a good thing, right? That there has been quite a bit talked about, written about, said that as blockchain and automation come into companies, as this new IT ecosystem becomes more mainstream, that there aren't going to be the jobs and the roles and the opportunities. That is totally false. Anybody that I've talked to, either as a colleague or on the boards of firms that I sit on, they have more work now than they ever did, right? Because one, there are always issues that are going to pop up as a result of any new IT project, but also right here, even though it's a tool to help us, it is not perfect. And as this tool gets actually used more and more, issues of this kind are going to keep on happening. And there really is going to be a big growth market for individuals and firms who understand the technology, obviously, but also understand how that technology tool impacts the operations of the business and how the data of that business is treated, analyzed, and exported. And so with that, I did want to open up the floor for any questions, and also put my contact information up there in case any of you are interested in following up afterwards. So in terms of content, I am going to pause here and open up the last 4-5 minutes for any questions.
Thank you, Smith. That was an amazing 1.5 hour. I know there's a lot of technical stuff. I'm sure people who would have already read blockchain a bit, they would have definitely understood the cryptos more. I think the crypto assets, there was, and good that I got my answer actually I've been looking for, because I seriously don't know where the crypto assets will be recorded in the balance sheet. So I
No one knows.
so I just wanted to cross verify that. Will that come under intangibles, inventory, or so you said that it won't come under any of these three categories, neither the cash balances, so which is the currency, neither the intangibles, neither the inventory. So there should be a separate asset category for cryptos. So that I think I got my answer. So I'm just looking for the people questions who all I have now. So the first question comes from Madhu. Can blockchain technologies take over Swift?
Oh yeah, absolutely. I mean, and actually Swift had two projects underway. Actually, they actually tried to, and I don't know how it ultimately turned out, but I haven't heard about it. But actually, they were going to build out their own blockchain platform and call it Swift 2.0. Have not heard too much on that recently, so that probably hasn't worked out. And then also, Ripple partnered with Western Union and Swift back in 2018 and 2019, and they had I think half-year trial period to partner up and to research. But yeah, absolutely. But I would only add one other point here, in that, in theory, a blockchain-based international payments platform could supersede Swift. But in order for it to work, it would have to have the actual buy-in of every country that's currently a part of Swift. So from a operational point of view, sure, it could absolutely work. In terms of politics, economics, all of that, it's going to probably take a bit longer.
One question from the YouTube comments we have is, any good books on blockchain?
Oh, absolutely. There are endless out there, but for a good place to start, one, the original Bitcoin blockchain white paper, the original one posted online on October 31st of 2008. And then IBM has a excellent book online, free, blockchain for dummies. But and I believe it's in its third, it's in its third or fourth version. And so I would say, to help you to get a good baseline for blockchain, start there.
So the next question is, will it be foolproof to override the challenges in the upcoming changes in IT?
I mean, there is no foolproof way to try to forecast what changes are coming in IT. I mean, if you ask me what the future of blockchain was going to be back in 2015, when I first started getting into it, I would have no idea how it would ultimately be in 2020. What I would say, though, and there are any number of avenues to actually have a really honed in conversation, that in terms of healthcare, intellectual property, online social media, that the impact of blockchain on the current challenges of IT in terms of capacity, privacy, all the rest, that impact is going to be quite large. But it's ultimately hard to say how it ultimately will play out.
So I think the second question is, just a second, Sriram, we have a YouTube comment again. So is the blockchain and the cryptocurrency, I think he wants to ask, is this cryptocurrency banned in US? Because here
No.
in India it is restricted. So I think that's where they want to ask, is it restricted in US as well?
I would say that it's not, that there is no official ban or official restriction on it. But I would say that in terms of actually trying to use cryptocurrency as a currency, there are not too many places that you do so. So the individuals and the firms that have bought into it have actually done so more as a financial instrument versus a actual currency.
Okay. Yes, guys. So I think investment is mainly for secured and ease of access is significant. Yes, others, any questions if you have? We have a couple of minutes more. If anyone have any questions, they can put it up. or they can raise their hands also if anyone has any questions.
Everyone's an expert now.
Yeah, that's what. I'm just waiting for a couple of minutes because it's
Sure.
already 1.5 hours. So that's where I think if they have any questions. So guys, we have a couple of minutes more. If you have any questions, so this was an amazing and interactive session. Blockchain has always intrigued me, and these updates and points have helped me to. I'm excited to read up and research more. Thank you so much.
Thank you so much. Thank you.
For organizing this. Thank you so much. I think Ananya, and thank you, Smith. I know that blockchain is a very, very complicated topic. It's not like just come in here and attend that. You need to have a good foundation to understand the blockchain, even the fundamentals level. But very, very good sliders with AICPA also, where they have said that even you need to audit the blockchain itself. So this will be the new profession of auditors. So I'm really happy that students have got little bit flavor. At least they would have understood that this is something which will impact the future of our profession. And it is important that for them that they know the significance of this technology. And thank you so much, Smith, for giving your 1.5 hour of time. This has been really fantastic. I know you have spoken a lot about the coins, and I was just talking in our stock market group about the next Wall Street 2.0, which is ICO, which is initial coin offering. So most of them are going for coin offerings and all. Previously, it used to be IPO, initial public offering. Now we are ICOs coming up. So I've worked with a lot of the blockchain companies who are doing that. So good to see that about the coins more. So I think they would love that in the Wall Street 2.0. Thank you so much, Smith. That was an amazing session. Thanks a lot.
Absolutely. Thank you all so much. Have a great evening.
Thank you. Thanks a lot, Smith. Thank you, guys. Thanks a lot for attending late night. Smith, if it would be great if you can share this PPT also with Sangeeta, we can just pass on to the participants as well, and they can just go through that PPT as well.
Yep.
Thank you so much, Smith.
Absolutely.